Good morning, everyone. Today is Monday. It is February the 4th. Pre-markets are a little bit quiet, dollar bouncing a little bit, gold trying to find itself a bottom. A lot of quiet action here in the morning as we start a new group of earnings across the board. Last week, we had Friday, the non-farm payrolls, and I talked about things being sort of net neutral. And really, if we take a look at the daily chart, this doji really does define this. So we can't use individual observations to define market motion, but what we can see is the following. I have not breached the high of the day before the non-farm payrolls, and I certainly haven't breached the high of the non-farm payrolls. So last Thursday's breakout area above 13 is really going to give us a chance to see if we can expand a little bit higher. SPX traders have a fairly narrow range, and so they are looking at only about 18 points right now, and that will, of course, shift or not shift. But if we cannot get ourselves back above the close of Friday, we should begin to examine frontline support. And so those numbers are going to be around 2692, 2691. Here's the thing. Pullbacks are going to be buy zones. This is not a breakdown space. Every single thing that we're looking at is holding itself solidly, except for gold. And that really has stopped its fall since early this morning. And so everything looks to be stabilizing. Could we have ourselves a very sideways day? Yes. Could we be waiting on a new set of releases? Yes. But as the day trader, the intraday trader, your number one goal, because you are exposed to markets so often and so many times, your number one goal should be risk management. And the risk management here says, hey, watch for the support action, consider the long. If we can't get up over the close of Friday, we potentially have ourselves a test of prior support action. Our automated system here says that old resistance sits near new support at very familiar levels, 2675, 2678. So we'll watch that for the range space that we are considering in general, knowing that our big swing system through Metastock is asking us to watch for the failed retest of the highs. Now, the failed retest of the highs can't come until we test a support zone that bounces. And right now, we seem to be slipping through our support edges. We have to wait until we firm them up, we come into resistance, and then we execute the trade. Is that a lot of steps for some of us? Yes, but for me, my goal is always risk management. It is the number one way that you get to stay in business for a long time. All right, so that being said, we move to the NQ, looking at the same sort of thing, getting underneath the edges but holding. That confirms the buying pressure being stable. Lot of very bullish news pervading the airways. I would say, I'd be careful. A lot of bullish news doesn't always mean bullish pricing action ahead. You've got to get up over the close of the prior trading day. And that is firming up as resistance in the early part of the morning. Once it gets up and over there, you can start watching for the stabilization of that edge so that you can continue long side. Otherwise, just like this one, you wait for the retest of old support or old resistance new support. And we've got resistance here. It's showing up here visibly as well as from the systematic trading space. Anytime we have downward motion like this and we see upside arrows, we know it's an exhaustion into resistance. That's what the system is telling us here. It's our fade into support. We've had a sideways edge that we've broken out of. What's natural? That we test the top edges here and then try to move forward. That's my suspicion. Because things still look extremely bullish. Taking a look at the YM, same sort of thing, pretty range bound, flat moving average, same kind of resistance congestion, popping up into Friday's areas, but not getting through the close of Friday, staying above the low, but not getting through the close. We could be very range bound. The momentum is going to favor buyers at the first pass, but that could be with a deeper retest of support. All right, taking a look at oil, was breaking out into really bigger zones, came in here, very bullish action. So when we see something like this arrow and we've got resistance to the far end. We say, hey, listen, let's look at support ahead. And that's what it gives us, the support action that really holds up to about 51.85. We won't count these wicks right now because they're just testing areas as they completely recover. What are we looking at today? Well, this was a little bit of a thin auction, and now it's moving up into this old support area. And the question is, how well can it hold above 55? That's going to be a pretty good number for us to look at in terms of how well is our chart going to recapture and move upward. You know, EU said, hey, we're considering sanctions against Venezuela ourselves. You know, who knows what's going to happen there, but that is going to put a little bit of a squeeze globally. Not really going to affect us, but you know, this motion is not about what's really happening. It's about the perception of what's happening as it relates to future motion. And so, you know, they're thinking 56 to potentially 60, and they being big oil traders, and that really is what we're looking at in terms of the motion down. This inverted head and shoulders pattern still cleanly visible, I would say. We just have an unusual little pattern here. So what we have to face off is, how is resistance holding, and can I recapture it? If I take the breakout here with my moving average so far below, do I need to have warning signals if I get into 56 and I can't breach higher? That answer, of course, is yes, and you want to be careful about that. Gold recovering, take a look at this, right? Pretty noisy pattern here in gold. Congested support. You know, this is the big thing. People are trading this in lots of different ways, but that you can see clearly that they are hedging in some form or fashion. Here is resistance, that is support, old resistance, not a very congested area, but clearly an area of decisioning from this space. 1331, also a big deal. 1316 is a pretty important edge, but 1302 is actually a much bigger deal. So we'll see what happens. The dollar is bouncing, but it's not supposed to bounce much. And this is clearly divergent. So we know the pullbacks are going to give us buyers at the first pass. The question is, how good are we at getting above 1325? That's going to be the order of motion, I suspect. All right, good luck trading today. Keep alert.